Hello, today I'm Brian Corbett with Flagship Property Management. I hope you've seen some of my previous videos. Today we are going to talk about a very important part of real estate investing, which kind of ties into our property management, and that is financing those real estate investment deals that you have to make sure that you're getting a good deal on the property, getting the right financing, turning some cash flow, if we will. Today we have with us Mr. Wesley Barnes of Union Bank. Hey Wes, how are you?
Brian, I'm good. Thanks for having me.
Fantastic. Wes has done a great job for us. He's offered us some financing, myself. He also has opened up Flagship to the local bank, Union Bank, for our business banking needs, if you will. And we've actually been able to send him a customer or two as well that has ended up very happy. So we wanted to have Wes on here to discuss financing some of these real estate investment properties that you may find. It's not going to be a great detailed video because it can go on for hours, I think.
Absolutely.
If we wanted to really dive into it, but we're going to give some basic concepts on the commercial lending side of things and working with a local bank, and maybe what some of the benefits are working with a small local bank versus what I like to call the big box branches that may or may not take some of the flexibility out. So if someone had a property, or they don't have a property yet, they have researched, they want to get into real estate investing, and they have found a property that they feel like is going to cash flow well. Maybe they've consulted us and we've talked about the cash flow possibilities, what it would rent for. We have videos you can reference back for that. And they decide, I think this is a good investment. Maybe they're a little nervous. They want to dabble their toe into it. Smaller property, something more affordable that they can figure this thing out with the help of you, the help of us, maybe some others. Is that something that Union Bank would lend on, a small one unit property?
Again, thanks for letting me be here, Brian, and the answer is absolutely. Pitt County and Greenville specifically is somewhat of a transient market.
Okay.
We've got the hospital, we have the university, we have people that come to Greenville and spend time in Greenville, but sometimes go on elsewhere. And because of that, the rental market in Greenville, in my opinion, is a very stable market.
I agree. I agree.
A fair amount of my book is in rental properties, in investment properties, and I'm referring to the smaller rental property that you were just making reference to, as well as apartment complexes. As you know, there's a lot of apartment complexes in Greenville. Yeah. And anytime you use the word income producing, it falls into a box that it's all kind of the same. Because it's not a primary residence, and because it's not an owner-occupied facility like the beautiful one you have here, it's looked at as a little bit of a higher risk.
Okay.
Now, with that said, I'm going to piggyback on what just came out of my mouth, which is I do a lot of those properties. Okay. We look at that deal and we want to make sure that the property that is in question, that the person is looking to buy, cash flows itself. Okay. You want to see that your investment is going to pay for it.
Is in fact that.
Yeah, absolutely. And so once we can kind of see what the person's going to buy, and that's going to be through the help of you, and then do cash flow analysis from potential rents and future rents and expected expenses, we try to get to a 1.5 to 1 cash flow coverage. And what that means in a nutshell is that you're at least making $1.50 to every dollar of debt and expense.
That's a good way to say it. If you'd like any more information on that, feel free to give us a call or Mr. Barnes, and we can go a little further into that debt versus cash flow ratio that he just talked about.
Which is very important. It in my opinion, is the driver of the decision. Okay. I'll go on and talk about loan to value. Going back to what I said a second ago, a banker looks at an owner-occupied facility or a customer's primary residence as their number one thing. Okay. That's the thing they're going to hold the tightest to. Sure. Because when things go bad, and sometimes they do, they usually hold tighter to those. So banks look at that as the customer's most important piece of their portfolio. Thus, you hear about mortgage companies giving 100% financing and 95% financing. On the commercial side, on the investment side, it's usually going to be 80 to 85%. That's going to kind of be your max number. So I think that's an important part for your customers to know, as well as my customers to know. prior to coming to the table.
So that person is going to have a little bit of skin in the game.
They absolutely
So
are.
you also, so you check the background, the credit situation, the income situation of the individual itself, but it's also as much and if not more on your end, the commercial banking end of the deal, on the deal itself.
No question.
Okay.
And we call that primary sources of repayment.
Sure.
How is this person going to pay me back? This person is going to pay me back by what their investment does. The rents versus expenses, the net cash flow to service debt.
Gotcha.
So we want to see that, you know, I said 125 to 150 ratio.
Gotcha.
And as Brian said a second ago, that's something that we could have a 30-minute conversation about
Absolutely.
at another point. So.
Yeah, absolutely. Okay, so that's good to know then that that the deal does play in factor. I have had some clients in the past and some clients that have wanted to, potential clients should I say, that have wanted to dive into real estate a little bit, and their fear was that their credit situation, although not bad, may not be perfect.
Right.
You know, their income, although good, is not a high income earner.
Right.
And I think sometimes that's a misconception, is that you've got to be a 6-digit plus income earner to buy an investment property. And in fact, that may not necessarily be true.
It isn't true. Obviously, you know, bankers, the more the better, you know.
Well, sure, yeah, absolutely.
You know,
Yeah.
And that's just the way it is. That's
Right.
the nature of the beast. But at the same time, I mean, you know, in Eastern North Carolina, we're hardworking people.
Right.
And not everybody makes a 6-figure salary.
Yeah.
But if you can show the wherewithal to save a little money, to surround yourselves with what I call COIs, centers of influences like yourself, to sit down at a table like this and discuss diversifying your portfolio on the financial side, whether it be through a stockbroker or through real estate, and you can come to the table with your due diligence and your money saved, I'm going to give that person an opportunity.
Okay, that's good. So it's not just the right person, it's the right person with the right deal.
Absolutely.
We'll carry this conversation a little further.
No question.
Okay,
No question.
good.